Hi there, it's Francis. It's the 23rd of July. It's Monday, giving you a quick update on crude oil. Crude oil, we did a clip last week saying crude oil on the macro time frame going up to 135. However, that there was a short-term trade on an inverted head and shoulders, which would give a shorter-term trade target just north of the $92 mark. That was the clip that preceded this one. And it was 92.82 that we presented as our target. The interesting part about this clip is the discussion regarding the manner in which I utilize head and shoulders patterns versus traditional technical analysis. So interesting one, we have been in a downtrend on crude, so there was the downtrend. Recapping this, we are incidentally on a 6-hourly chart. This is what I've drawn, 6-hourly. We had a pennant there, little breakdown. This gave us our big right shoulder over here, our big right shoulder, and then followed our final head, which made a low over here. As you can see, that low ran right away across here, so pretty close to a double bottom too. And then we bounced back up. We bounced up to this level. Note how I've identified the $85 mark. This is the line showing up in yellow. This is what I highlighted to you yesterday as the key level for me in the head and shoulders. Pulled up to there, stalled back, popped through, came down, sat on the level, second chance, as you often get, a pullback to neckline with head and shoulders, and then good trend up all the way through and target made. This is on how I elected to choose the $85 level. In other words, I said we broke down with momentum here, we pulled back up, feigned at the line, came down, went over it, couldn't hold, came down, gapped over it there, capitulated through it, came up to it, couldn't break it, then just tiptoed over, back down, and then made the head. So you can see this level's been respected. Traditional technical analysis would have had this as the neckline, in other words running through the highest point of the left shoulder there and the highest point of the right shoulder, then extended through. So you only would have been buying at this point here, over there, where we have bought at the 85 mark. Also, our amplitude for the target is shorter and more quickly made. You can see we've made on our short-term oil targets the target over here at this point over here, and we've stalled quite strongly back down. Those that are trading the traditional technical analysis trade would have got long at this point and will be nursing a loss, having missed the earlier trade. They would also have to hang on for a while longer for a much bigger target to come. So just an interesting update for you. First target made according to how I use key levels of significance. I use the phrase key levels of significance, often round numbers. They can be significant for other reasons like Fibonacci channels or just generally the price action respecting it, but key levels of significance gave me this as a working neckline for this, and that was your trade on oil for the short term. What tends to happen after a target is made? You do tend to get pullbacks. There's an element of exhaustion in getting up there and you get pullbacks. Will this target possibly made? I still think in the long run we're going to see 135, as I highlighted on a much bigger time frame. When we were able to do that, I highlighted that, and you would have seen that we made a big case for that. But that's a longer term trade, that's not going to be overnight, and that is a position trade to be held for months and months. So hope you enjoy this update on crude oil, and I look forward to giving you further information on this. Please rate and share the clip.